Welcome traders to yet another educational video of stock analysis. Today we can see that Nifty futures have closed almost 245 points in the green territory. Bank Nifty has closed 305 points. But if you see properly, Bank Nifty has not appreciated as it should in comparison to Nifty futures. But if you check properly between private banks and PSU banks, then PSU banks have certainly outperformed the private banks. Now, if you see the charts of PSU banks, what we can see in the daily chart is one interesting thing that yesterday we had a spinning top, all right, and the spinning top was actually made at a zone where a lot of sideways range bound movement had been done a few days back. So this is actually a decent support for this particular index, and also we can see there is a 50% retracement, and today we have a big green candle. All right, so this looks positive, but we should not forget that overall markets, Nifty, Bank Nifty is still extremely choppy. Now, if we talk about PSU banks, there are three stocks which come to my mind. One is obviously SBI, which is still holding on. I had made a video on this stock a few days back. It has not been able to outperform very much, but it is still holding on nevertheless. And overall, it still looks decently positive. Bank of Baroda is one stock which I want to share with all of you today. Now, yesterday, what we can see is we have a high wave candle which has been made at a zone where a lot of trading has taken place and a lot of volumes have also taken place. So there is a confluence of support in three different ways. Number one is this 50%, this 50-day simple moving average is also a potential support. Apart from that, we can also see a lot of sideways movement has happened in this particular zone. This is adding to the overall support zone, and a lot of volumes we can see in this particular zone. So generally, when we have a lot of volumes generated in a particular zone, in a particular sideways consolidation zone, it acts as a very good support for that particular stock or the index. And immediately today, obviously the entire market was positive today. We have a very good candle. All right. Now, let's shift our attention to the short-term chart. In the short-term chart, that is the hourly chart, we have a very small, you can say channel breakout, a downtrending channel. You can see that stock was continuously trying to go down, and suddenly we had a very good breakout today. And before this breakout, if I change this chart to a line chart, you will be able to see that we had a lower low in price and we had a higher low in RSI. So generally when this happens, it is a good sign that the stock is certainly trying to bounce higher. But this is not a buy signal, certainly not, because if after a positive divergence, a consolidation happens and then if the stock starts going down, then there is no point of a positive divergence. But in this case, after the positive divergence, we saw prices started going higher, and we can see prices have closed above the Bollinger Bands also, and the Bollinger Bands have expanded very nicely. So this is a sign of expansion in volatility. So generally expansion in volatility, when it is accompanied with a breakout with a decent looking chart, it is a very good sign for breakout traders. So according to me, this seems to be a good stock to probably buy within the zone of 115 to even possibly 113. Your stop should be somewhere around, according to me, at 112, somewhere over here with an hourly closing basis. Okay, not just that the price dips to 112 and your stops are triggered. The candle should close below 112 on an hourly chart basis, and possibly the first level which could be tested is somewhere around 118, and second could be 121, and probably even more than that. One thing, do not forget that yes, it is a really good looking stock. The overall state of trend of Bank of Baroda is really nice, But one thing, my friends, do not forget that overall markets, whether you say Nifty or whether you say Bank Nifty, overall markets are really choppy. So try to deploy less position sizing in current market scenario, because this is not certainly a scenario where you would like to trade aggressive. You should be preserving your capital, trade less, trade wisely, and stay safe. Thank you.